Good afternoon, everyone, and welcome to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our market update. Not too much with earnings to go through, although next week we will be putting out the Q2 2024 earnings plan. So that will be coming with along with the results from Q1, which seem to be slightly negative, unfortunately. And then at the end, we'll have Joe's analysis. Um, so let's get started. Okay. Um, Market wise, you can see Russell um, dipped into a few days ago. So um, Dow's been there since our last meeting, and NDX, SPX still holding ones. So as far as sectors, we did have I think it's XLY popped into a two, then went back into a one, and then financials went into two the other day. So currently 4 and 2. Um, so not horrible, but overall green pie, you can see here. Last week we were right above 50. That did not hold. We're down to 43. So we're not down in the 30% level, so we're not oversold. And state one's not above 45, so we're not overbought. So kind of in the middle right now. So let's take a look at market pulse. This is just bullish bearish. So we did have the cross. Excuse me. So we did have the cross last week. We were looking at it, right around here. So a little bit of a cross. But we'll see how that pans out. With the action today, we weren't getting a lot of lows, so nothing like this back here. Just kind of a die off in both the highs and lows, and that just kind of mirrored the market. Just kind of meandering, especially for like Russell and things like that. Obviously, this SPY has been kind of propped up with Nvidia, then Apple. So, and then both of them today are way higher again. So, this is telling me right in here, kind of like last week, trying to find a direction maybe today. We get a big bump. Maybe we'll see a lot of green here, but we'll see after the Fed. Usually we get a reaction after the Fed, and then the next day or so we'll know the general direction. But other than that, like these moving averages crossed, obviously the 20 did. That's the first to go. 50 crossed. Um, yeah, I don't think 200 is really even close. So, and let's look at the individual states. All right. So, that high right above 45 turned around. Obviously S&P, as I said, was still kind of grinding higher with those two big symbols kind of pulling most of the weight there. Eight's kind of rising a little bit. So, looking at the twos, the ones obviously go the two. So, but, if we look at fours, there's nothing going on there. So no follow through at all. So just kind of like a two pop and then really nothing in the fours. So, that's kind of what it's telling us right now. Is that there's no follow through with these twos. So, it's kind of like, a lot of our strategies in those daily trades, we look for things going 1, 2, and then, they pop back into a two, hit a target, and usually bounce off it. So it's kind of what it's looking like currently. We'll see what Fed says. But, it's definitely not looking bearish overall, especially here. We got nothing in the lows, since this one little spike back here, April 16th, pretty much dead. for the lows. So that's kind of where we're at. Market pulse. Let's look at the states here. So it's a nice little track here, typical. So it looks like we're going to be up above this. So um, after today, so that's pretty much the target track for the one. So it actually followed almost to a T, how these things kind of go, test support, and then, test resistance here, kind of fall down, test support, and then go. So we're in the go phase. So we're definitely above target two at this point. That's 5,400, which was the top of the range. So yeah, we close above here and hold. We're in a new range. Previous range 5,000 to 5,400. So this would be 54 to 58. I think Joe called 50, 500 by when was that, Joe? Next month? um,
Yeah, yeah, not far off, Josh.
yeah. So we'll give them points for that. And obviously still got quite a bit of time, 43 on average. We're 25 in, probably about at the average move now, ballpark. And we'll have T1 met. So, obviously next step would be the top here, target 3, 54.82. Let me just pull up. Yeah, we're 54.36. So 40, 50 points off of that. So that would, we'd expect strong resistance up in that range. If we get above there, close and hold and kind of turn that into support, then it could be off to the races. We've seen that many times. But, on average, we kind of do this, get up in here, and then, that's like, I think it's 2/3 or so of the time, pull back and maybe the other third. That's just kind of ballpark numbers, get above 3. So that's where we're at here. Pull up the charts. So let's kind of pull it in a little tighter. Draw the top of the range. So we're currently right above that 54. There's your bottom. That's previous range. So yeah, I think another big thing is this 20-day again, right? So we talked about that last week. So as long as we're hanging above that 20, it worked basically for October till when is this, April? That's pretty much the trend line, the support trend line. So I kind of look to that 20, especially for the SPX, going forward, staying above that. So right now that is let's just call it right around 5,300. So over 100 points away. So that's looking good overall. SPX. Here's our Russell, went into state 2. Obviously a short duration, under 2 weeks. So that's 8 trading days. So today's our 4th day in. And the entry price here is 2026. We're well above that right now. Obviously had a huge move with CPI and inflation. We'll talk about that. But this is our most rate sensitive indice, and 2076. Oh, sorry, wrong one. So we're well above our entry price. So that's near-term support. Of course, our resistance is right at 2100, 2095. Of course, where else would it be for a Russell, which has been, that's the top of our range. And I mean, even down here, you can just see the problems we've had with that for quite a long time. So, if we get up here into this, obviously not following, the typical path where we get down here and then test and come back. So this is sort of an atypical, so we meandered a little, kind of hanging near the entry price, and now we're popped up, um, kind of this range. So, we'll just have to see, if we run into more support at 2100 for Russell. That's just the key, get above there. So, but I think what did I say, 2080, 2076. So we're in the neighborhood again, which is good. If rates kind of keep dropping out, expect that to be broken. There's 21. I would just at this point like to give a new range. So here's the current range. So we drop below the 50 here. So that's the 50, 2044. Just for a few days. So we're back above that, at 2076, we're 30 points above that. Didn't really test the 200. We talked last week about kind of every 100 points being like a support resistance line that we can kind of gauge, the Russell if you're trading some of these lower, smaller cap symbols, medium, smaller caps. So, kind of got near the 2000, 2008, 2006. So kind of right near it, and obviously real big bounce today. So, but if you look back here, just kind of like resistance, uh, pound. Look at this, up, down, support. Ran up, support. So pretty much every 100, kind of useful. Even here, resistance, pop up. So, did support here, and obviously we got to pop up, and this is key for Russell 2100. Okay, so we'll talk. Let's talk 10-year real quick. We'll pull it up. Pretty volatile recently. Let's see if it's in. Yeah, so 4.6. That was a couple 2-3 weeks ago. Dropped all the way down 4.2. I think it's mid 4.2s. Pop back up right around 4.5, and now we're below 4.25 right now. Very volatile. Obviously, this is good for stocks. I think as far as Fed, today I don't think we're doing anything. Below 4.5, as I said, to kind of bullish overall. I think and the lower we go, the better. Obviously, so well off 4.5 at this point, but very volatile. Um, so going back to these numbers, we had some key inflation. There's core, missed by, I think it was 0.16. They just kind of round up here. So it's below 0.2 month over month. Year over year, still above 3. This is a more general inflation rate, 0. And then I think the big one is like CPI. Here you can see the consensus, the forecast. So pretty good, below that. Did want to pull up some charts on this. Let me talk about this. So this is the rent year over year, and then the CPI owner equivalent rent. So there's like a big lag in this, from kind of follows Zero Hedge. They put out a lot of good articles. That's where a lot of these come from. But there's 5-month lag, so you can see there's a big drop off here. So what they're saying, we got a 5-month lag of this big drop, which is going to be good for CPI overall. So like, even if other goods are increasing a little, the the rent equivalent is going to be dropping quite a bit for a while. You can see it got over here, in the kind of 2.2% range, which is fairly, typical. I would say, I mean, if you go back further, it's kind of like this is kind of the sweet spot. Um, so you got this big fall for months to come, which is going to be helpful for CPI overall. So what they have done is we talked a lot about this previously, the money supply. So year over year, we just went positive. So they have this big rent thing coming, basically drop in rents overall, rent equivalents for, months to come. So now they're turning on, increasing liquidity overall. So, I just kind of want to point out some of the things on here. So like this big drop, that started December 2021, kind of flattened out, around March. So let's take a look at the charts. Let's look at this S&P. We pull that out. So here's December 2021, and there's our big bear market. And that was kind of the end, right? March. So if you kind of look at this, that's where the big, we had obviously these crazy numbers, but this is kind of when that systematic drop from, this is like 12 and a half down the negatives, money supply. So that was from December, kind of March, things just leveled off. And, we can see here, kind of end of the year, things started picking up and now we're net positive overall. So I think they're trying to get back to status quo on M2. So thought that was interesting and how that kind of correlated overall with the market. So I think that was it on this, Fed meeting. So obviously we're, like an hour out here. Nothing planned today. I don't think anything will happen. I was expecting July to move a little more, but pretty much from last week just became actually more for no cut. Despite headlines and all that. I mean, you look at it, we actually increased, for no cut next week. September, still first cut. So that one actually beefed up a little for one cut. And then definitely by November, you get at least first cut. And then December, this pretty much the same, two cuts about. So, that's kind of the middle median there. It's two cuts. So, we had talked before, a lot of this, political, obviously we're in a presidential election year. So like cutting beforehand, I think would kind of look political, but, I think, you have Canada just cut, Europe cut. I think, that will put pressure, from, the market for us to cut. Why are they cutting and like we're not, so that could help with something before election. That's just my kind of thought on that overall. And then let's go up to 2025. We haven't looked there yet. So the latest they got is September. So current rate 5.25, median's right at 4. So that's 5 cuts. So we'll start at least glancing at 2025. We're halfway through 2024. So if we look a year out, here's June 2025. So that'd be 1% overall cut. So that'd be four quarter cuts. So thought it was interesting. So kind of, not big changes. They were like, I saw a lot of headlines like, "Oh, July's not off the table now," but this is what the projections are saying. Actually, stronger that they're not going to cut July, but possibly September now. So
Hey,
anyway,
Josh,
yep.
do you know how they arrive at these, where they say 85.5%? What is that based on? Do you know?
Yeah, this is it. Probabilities of changes to Fed rate. It's all up here. We talked a while. I
Oh,
haven't looked at this recently, but we covered it like, God knows when, a while ago. Probabilities changes Fed rate and U.S. monetary policy by the implied 30-day Fed funds future pricing data. So they take it off of traders on Fed funds.
okay.
Mhm.
It's not from that dot plot thing that they use, is it?
Nah, no, no.
Okay.
That's just kind of uh, interest rate and hikes for dummies chart. It's just like, oh, this is where we may be like, and you know, I mean, it can move markets, if it's kind of way out of whack, but this is, I think, a much better tool than kind of looking at those charts. But, you can get reactions to the charts. It's like, oh, there's people like last time there's the Fed minutes came out and a couple of them were like, oh, we're not opposed to raising rates. And, that kind of threw the market a little bit. But I would doubt those people would be saying the same thing, after, at least the current ratings. So,
Right.
mhm.
All right. Thank you.
Yeah, of course. Okay. I think that's it. Summed it up. Let's open up to questions, comments on the market. Nobody? Okay. Well, thanks, Lee. All right. Let's just talk. There's not much going on. We got a few bearish runners. Those aren't going to be doing well today. At least, see, Target. Oh, they're not. These two are the big ones. Just kind of driving so much. Got Apple, Nvidia, Microsoft. So those aren't actually doing horrible today, but we got we're slightly up on these, but just kind of day to day, touch and go overall for these bearish runners, and definitely not a banner quarter. We've had a few good sections, but those ones, we'll just see how they turn out. Then FedEx, we got these have done well overall. The vol rise. um, so we get out of this one before earnings, 25th, or if we hit the profit target. Hard to hit the profit target on these, unless there's some big movement. But yeah, this one's been doing well outside of Foot Locker. But so, but there's no more Q1 trades. So next week we'll have the plan for Q2, and those trades will start rolling out shortly thereafter. So, but that was it, and I'll try and have all the results also next week for Q1, so we can analyze that. So any questions, comments on earnings? Okay. All right. Well, I'll just hand it off to Mr. Joe now. You ready, Joe?
All right, Josh. Yeah, Josh, thank you. And interesting that M2 chart for sure.
Yeah. Yeah. I was
Yeah.
surprised seeing that.
So, as usual, I get a handful of charts I want to talk about, just kind of review, just, today's another example. Surprises continue to be to the upside, the market, whether we had a rolling correction in certain areas, and there are a couple of things that have corrected, that we'll review today. But, yeah, whatever the motivation, clearly surprises continue to be to the upside, and I think that's driven by just at the core of it all, good earnings, and as always, the bond market backing off a little bit. The S&P oscillator, which last week was minus 1.7, is about neutral, but here we are, bang through all-time highs, and the oscillator still at minus 0.1. So it wasn't that long ago, as I've repeated, we were plus 7.8, we corrected significantly in that indicator, and the markets continue just to churn higher. You mentioned a couple of stocks that are driving that. From a number standpoint, we've got PPI tomorrow, month over month, and core. I think they're looking for 2.3 to 2.4 on a core year over year. These numbers come in line. They come in, down 0.1%, and off we go. It just, it's a strong market, no question about it. Let's see. I continue to mention, and it's just, there's nothing black and white about it, but we're 2 weeks and a day out to the first debate on June 27th. I just can't wait to see how the market reacts on Friday, June 28th, after we get a chance to see our candidates in action. The markets have done well, after all recent presidential elections. But I think, I'm really anxious to see how the market performs that Friday. From a charts perspective, you hit a couple of these, Josh, but a couple of things that caught my attention, in terms of the indexes, the ETFs, was, real estate went into state one, a couple days ago. So I'll go through that. That caught my eye. Obviously, that could potentially be big, which surprised me a little bit when I get into some of the details of that thing, are some of the names that make that up, not the home builders that really I kind of expected. You mentioned XLF rolling into 2. We'll look at that. I think that's kind of a non-issue. And then the XLY, consumer discretionaries, which we've talked about on and off a lot over the last year, given the strength in that thing, rolled into a state 1-2 2 days ago. So we'll hit all those charts, but when I look at the homepage, that's what's jumping out at me. You talked about a lot of the state 2s, and we have had a hell of a lot of state 2 transitions over the last week. And Shook's got those algos, suggesting whether it's out of 2 you're going into 4 or 1, but a lot of state 2 transitions, and if the market keeps going up, I think a lot of those things are just going to turn around and get right back into state 1. So let me pull up some charts. TLT, we're almost to the average period of time in terms of 7 days. When I look at that chart, not much there except for just kind of a bit of a trading range. And, when I pull up the 20-day too, obviously the same thing. So I think TLT is probably just range bound now for a while. And, because like Josh, I don't think the Fed's going to expect us or surprise us with any news today. But, TLT just hanging around that 20-day. Here's SPX, and the 20-day. We've talked. You get 200, 150, 200 points above that 200-day, and you're generally at the top of the range. After today's move, we're not that far. And something else that kind of jumped out at me, and again, we've exceeded targets. I talked about the 5-wave pattern to the upside in NVIDIA last week, which temporarily got us pretty close to that target. It's, of course, has blown through that since it pulled back a little bit from, I think it was 1155. But, here we go. 1, 2, longest wave, 3, short 4, and 5. But if leg 5 is to equal 1, we've already exceeded that. And, you get into an L8 wave, you get into these extended 5s, which basically, you have no idea where it's going to go. You can run ratios for the length of leg 1, which I think was 170 points. So then you get into a 1.382, a 1.5, a 1.618 to, give you various targets to the upside. But, I think bottom line, we just keep heading north and don't see any reason for that to change at this point. I think in the SPX and the NDX, we're a little bit extended after today's run. So I wouldn't be shocked if we got kind of a back and fill sideways move, for a little bit of time, just because, we're pretty far extended. But, we'll see. I guess PPI numbers tomorrow may give us some idea whether the move's going to continue in earnest. A bunch of sentiment numbers, which, I don't put a lot of faith in them on Friday. We do get a lot of numbers on the economy next Tuesday. So, kind of maybe an insight in terms of how soon the Fed may come out of next Tuesday's numbers. But, yeah, SPX, let me see. If I take a couple hundred points, off of the 20-day, puts us back up into that 5,500 range that we're talking about a couple of weeks ago, and we're not far off. I mean, today's I think is 54.46. So and then let me see. Is it? It's next one here. Target 3, 55.82. So, got to believe we'll get some natural resistance up in that level, 54.50, 5,500, higher than most people think we'd have gone. And then we'll just kind of go from there. And I just, Josh had pointed out, some of the, stocks that are driving things that can, the big just get bigger. And, Apple, for all its negativity there, pretty classic. I mean, it really was, how many negative stories in China and the whole thing, things are falling apart with Apple. And it's, obviously had a massive turnaround and interesting, took a while for us, to turn around into state one, but I'm guessing that had to do with the magnitude of the drop, from January through April, basically. But wow, it was a hell of a bar yesterday. And, Apple is the second largest stock in the SPX. It's Microsoft, Apple, and NVIDIA, basically all between 6.5% and 7%, and then it's Amazon at under 4%. So, probably extended in the short term. It's up again today, but and actually, let me pull this out a little bit. So we are, through all-time highs in Apple, and that is not insignificant. So just more momentum to the upside for the averages. NDX, no, there's just Apple over the 20-day, just clearly extended. But, after that 2-3 month decline, once we got over that 20-day in earnings, it really is held the other day and, off to the races again. So, try to incorporate those 20 days if you're trading some individual stocks. And Josh mentioned, I think, equal weighting. So I just figured I'd pull up the equal weighting, S&P. We don't talk about this very often. In a way, it almost looks like the Russell. It's just kind of sideways, not a big mover. You get through 170, you'll be off to the races. But it's just not much to talk about. It speaks to, a breadth that maybe isn't so expansive. And, in the months to come, we really need to do some more work on analyzing breadth in the market, through some different indicators. And I haven't really done that up to this point, but that's something, I want to work on, because as we get more mature in the bull run, that breadth and the negative divergences, we're going to want to be analyzing and talk about that kind of stuff. So there's always more to come with the markets, but that breadth analysis, which in a way we're analyzing Josh's each week, with the state movements. But I think in terms of advancers and decliners, we don't talk about that much at all. That's something we'll add to the repertoire in the months ahead. NDX just versus the 20-day here, and NDX can get, I think, 700-800 points above that 20-day. It's not far off there now. It just like the S&P is kind of reached potentially a short-term target. I mean, target 3 is 19,481. I've got 19,500 on basically 19,500 to 600 based off that 50-day extension, because you can get 700-800 points, over that thing, and we're not far from it now. You can see the natural 5 wave coming out of the April 19th low here as well, and crystal clear. The 20-day, I think we talked about last week. We get that one spike down last day of the month where things reversed, and we've been off to the races ever since. And just in terms of NDX coming up on average move, still have a few weeks of time. So and I didn't pull up the NVIDIA chart today, but it's just it's something else. And it is at this point the third weighted stock in the S&P at 6.5%. So going back to the homepage and the ETFs that I talked about, that I thought were worth taking a look at, XLF, because of the financials, just rolled into 2. Wanted to look at that chart just to see, is there any imminent negativity in this thing? And to me, no, it's a trading range. Plain and simple. If you get through 43, away we go. If you break down below, what is it, 39.5? I think there's nothing there. It's kind of sideways. So, it's just sometimes when we get these transitions, I think it's important to take a look at the charts and, looking at that, we're in a trading range, and it would just suggest to me, unless something changes abruptly, XLF is not going to be leadership in the market, at this point. So I mentioned, real estate ETF rolling into state 1. And, when I look at that chart, we're still in chop here as well. But, when I dug a little further, it surprised me that, I was looking for the home builders. I just figured, they were the core of this thing, and they're not. And I'm not really familiar with these stocks. I mean, I know the names, but, they're not stocks that I've ever traded before or follow. Prologix, 10%, American Tower, 9%, Equinix, 7%, Welltower, 6%, and then Simon Properties, which is a mall company, at 5%. So for me, a bunch of names I'm not really familiar with. Coming out of the October lows, this thing took off, and it's basically a trading range at this point. So I just think, I didn't draw the trend line across those recent tops from the middle of March. It'll be interesting to see whether, we get leadership out of this thing, which is why I pulled up a couple of these that just rolled into state 1. The other one, and then I took it a step further with the home builders. And here's their index, which, fairly low volatility, but, and similar to some of these other charts. Okay, what do we have? We have state 2, and we're basically at the average time, not much happening in terms of its movement, and it's a trading range. But the home builder index, the number one stock in the home builder index. And one thing about this index, most of the components, or many of them, are all about the same percentage, basically between 3.5% and 5%. The leading stock in the home builder index is Williams-Sonoma, which cracked me up. I didn't pull up that chart. But yeah, you got it, Josh. Williams-Sonoma.
Like plateware and all that, home goods.
Yeah. And I'm pretty sure the Williams-Sonoma chart, which I pulled up, a couple months ago. I think the thing was on a tear. Kind of reminded me of, a different area, Abercrombie and Fitch, which, just for some reason, some of these stocks have just been on fire. And I think William is one of them. But the other components, and again, between 3.5% and 5%, you got Carlisle, you got Johnson Controls, you got Trane Technology, Owens Corning, Lennox, Harrier, and then, I guess, where are we, 7 or 8 down the list? You finally get to Pulte at 3.8%. You got NVR at 3.7%. I didn't even see Toll Brothers in there. So, getting into the weeds of some of these things, it's a little surprising. And, obviously, if you're going to trade these things, it's important to know what they're made up of. So, just trying to tie in the real estate with the home builders a little bit. Couple more, XLY, as I mentioned, and XLY is really, 3 stocks. And this thing, consumer discretionaries, it's like so many trading range. To me, it's going to be interesting to see whether these state ones suggest that this will be new leadership. But, certainly the jury's still out. When you talk XLY, you're talking Amazon at 25%. You're talking Tesla at 13%, Home Depot at 9%, and then you drop all the way down to 3% where you got McDonald's and a bunch of other things. So that's the consumer discretionaries. 2 more here. Oh yeah, I meant to do this last week. Honestly, I told Josh, after the call, I forgot to do it. IYT, one of the indexes that Sudhir talked about, a long time ago that we finally added to the database. And in IYT, this makes a hell of a lot more sense. You've got Uber at 18%. You've got Union Pacific at 17%, UPS at 9%, Delta at 6%, FedEx at 5%. You got 3 different rails at about 4.5%. So if the economy, we've heard over the last month or so, the economy, I think, generally is been weakening, or some hints of a little bit of a crack, and so you've seen a pullback in this IYT. And next chart of the IYT is there you are, with your October lows, your March highs, and then the retracement. We got almost to 50%. No clear, 5-wave down, but I think this going forward is something very important to keep an eye on, just because it really speaks to the strength or lack thereof of the economy to an extent. So I suggest if you're not, watching IYT from time to time, give it a shot. They're the charts I want. Let me see. Yeah, I didn't. The next expected state. Yeah. Not really relevant here. Yeah, well, too many charts to go back and try to find that. But there was one that, it was like 48%, whether it goes into a bull or a bear. And I think, with many of these charts, we're still in a trading range, but these, some of these really monster companies just continue to take the averages significantly higher. So I hope all of you who are, steady listeners are lucky enough to be in, some of those issues. So, anyway, yeah, it wouldn't surprise me if we just kind of pause a little bit after, today's run up in the S&P and the NDX, in this 5,500 range, basically 19.5, 19.6 range in the NDX, but we shall see. And I guess that's about it. Happy to, take any questions. And if no questions, as always, thanks for joining. Josh?
Yep. Thanks, Joe. Yep. Always good analysis. Let's just open it up, to any final questions or comments. Otherwise, we'll do it again next week. Anyone?
Great analysis. I don't have any questions at this point.
Okay, thanks, Dan.
Kind,
All
thank you. We love doing it.
All right. Well, thank you all. We'll do it again next week.
Thank you.
Thank you. Thanks.
Bye-bye.
Bye-bye.